All right, everyone, it's Dom Bay here with Proof of Workforce live from BitBlockBoom 2025 with a legend that needs no introduction, Larry Lepard, author of the newest The Big Print. Larry, how are you? We got a bag here. Oh yeah, let's get the book out. There it is, The Big Print. You can't miss it. You've seen it. Larry, how are you enjoying the conference so far? And then we're going to dive right into like what's happening this last week and your thoughts on that.
That's great. Yeah, so first, the conference is great. I like these smaller shows because you get to meet with people and talk to people private, and it's less stressful than Nashville, or this year I guess it'll be Vegas, where there's kind of a mob scene. So it's great, and Gary does a great job with this and all that, so it's nice to see you, Dom. Thanks for having me on the show. Yeah, it's kind of an interesting week in financial markets, right?
Yeah. We're always having a conversation about stability in the markets. Here's what some of the headlines are saying, right? Biggest drop since 2020 that we just had this last week across the S&P and the Dow. 10% baseline tariff on most U.S. imports takes effect. Jaguars pausing U.S. shipments over Trump tariffs. People are buying now matcha. Fears of shortage of matcha green tea in Japan. Very turbulent week. What is you obviously have a ton of experience in, traditional finance, fund management, macroeconomics. What are your thoughts on this wild week that we just had, which, by the way, included most things not Bitcoin. Bitcoin held steady and the stock market got absolutely pummeled.
Yeah, so a lot of thoughts on it. One, it's nice to see Bitcoin be strong and decouple. Two, it's not terribly surprising to me that this eventually happened. I think the stock market has been an accident waiting to happen for a while. If you look at historical measures, it's at all-time highs in terms of price to earnings, price to cash flow, price to sales. And so, when things are stretched, when valuations are stretched, obviously anything goes wrong, and price to perfection doesn't occur, markets go down. So, and I think it's been we are in an everything bubble that was still being driven by all the free money that the Fed printed, really since 2008 in two different spurts. And so, what's next? I don't know, but it has a feel like 87, which I was around for. 2000, March of 2000, 2008, September 2008, and also March of 2020 when COVID came in. I think the S&P right now is down about 18% from its all-time high. And so in the COVID example, I think it was down 31 or 2% when Powell went crazy and printed money and turned on the spigots. So we got a little ways to go till we get to there. Maybe he'll hold on longer this time. Maybe he'll have to go down more. It does interestingly, it does kind of remind me of 87, because 87 was a similar situation where it just trailed off. I guess he made the announcement on Thursday, or did he make the announcement on Wednesday, I guess? I think he did. Thursday
was the press conference, yeah, where the market thought he was giving good news, and then he gave the full scope of the tariffs, and then it tanked.
But I think that might have been Wednesday, because we had two big down days. We had Thursday down hard, and we had Friday down hard. So in any case, selling off hard into a weekend and closing more or less on the lows, that's not a good sign. And so now over the weekend we get to see if there are any bodies that are floating to the surface. We get all the people looking at their accounts, maybe calling the broker next week and saying, get me out, all that usual stuff. So, it's probably a coin toss, but there's a chance that this continues next week. And, we're down 18%, say we go down another 10, 20%, well, pretty soon we're going to be right where we were in COVID, and it's going to be a full-blown crisis. And so, we know what that leads to. That leads to the big print.
Yeah.
That's the point of the book. But none of us know. It all depends. The other thing they could do is Powell could come out, and I don't think he's likely to do this because he's got too much ego and he's trying to be a tough guy, but he could come out and say some nice things on Monday in order to try and soften it up. He's a little bit of a damned if you do, damned if you don't point of view. If he does that, they're going to think, the guy knows it's worse than we thought and he's crumping, or if he doesn't, he's whistling past the graveyard, and everyone's going to say, hey, you don't get it, dude, and the market's going to keep going down. So it'll be interesting to see.
Well, obviously, the title of your book's The Big Print. You mentioned it in your comments. a lot of people don't realize when trillions of dollars is injected into the financial system, that's still trickling in. A lot of people think like, oh, they printed money in COVID. One example is a lot of the pension bailout money that Biden approved is still being dispersed on a regular basis. For us, the workers and the wage earners, we don't understand finance that well. It often seems like there's like plugging holes and avoiding one crisis by shifting liquidity and somewhere else to pull money out and cover hedges. What do you see as some of the vulnerabilities right now in, the macroeconomic system and global finance where things could go wrong if whatever they're trying to do doesn't work out?
Well, basically, the financial markets are a confidence game, and the financial markets react to, the policies that are being pursued. And I think the policies that Trump are pursuing are worth pursuing, and he has to pursue them. But the fact of the matter is that, in an overvalued stock market, you do these things and things are going to break. And in some sense, what Trump and Bissett did, did serve their purpose in a short-term sense. I mean, the yield on the 10-year bond, was in the 4.3, 4.4 area not long ago, and this brought it down to 3.9, 3.97 or something. So, it's kind of an evil plan. But if you're going to croak the stock market to help the bond market, and by the way, the bond market is what they say they're concerned about, and they should be, because they have to roll over $7 to $9 trillion worth of bonds in the next 12 months. So. It's a tricky situation that they're faced with.
And the bonds, that was from what Yellen did, right? To cover that, didn't she use like short-term bonds or short-term notes to cover that?
Right. So Yellen really, that's the other thing I should say. Whatever happens here, some of it they may try and blame Trump for, but Yellen and Biden handed Trump and Bissett just a total pile of shit. They termed out. They didn't term out the debt when the rates were low. They've got all the financing very, very short term. As short-term rates went up, of course, that's what added to the deficit. The U.S. federal government's now paying $1.3 trillion in interest cost. And, and then the excess, they put it into the reverse repo because she paid enough rates there to prevent it from going into the economy and creating direct inflation. But they've been using the reverse repo to fund all the debt purchases, and now the reverse repo is down to a very modest number. So, it's all come to a head. It's kind of the bottom line, and this is the problem with a system run by 12 people sitting around a table trying to figure out what the right rate of money is. They just can't do it. I don't care if they're godlike, they could not do it. The market does a better job. The market sets prices the best. We all know that. And so when you let prices get set by a committee, you have these extremes, and everything will look perfectly fine until suddenly it's not. You asked about vulnerabilities. I'll tell you one that was highlighted by James Lavish very well in his information, which was free last weekend. The U.S. hedge funds and banks have been engaged in something called the basis trade, which is where they buy treasuries and sell treasury futures, and they clip the difference between the two things, and that's good for the government or from a treasury point of view, because what it does, it helps the government sell its debt, and these hedge funds and banks are doing it, and they lever it up greatly. The spread is very small, but if you do it 50 times over with leverage, well, the returns actually get to be pretty good. But that's all assuming that the markets are stable and continuous. And what we're seeing is, as so many times in the past, the markets are not always stable and continuous, and what happens is occasionally you get a disruption, and then somebody blows up. So it's entirely possible, in my mind, given what's going on in the last couple of days, that there's some dead bodies out there that Citadel or somebody else is in trouble, and the role of the Fed. The Fed has a dual mandate, which is protect inflation and employment, and but there's a third unwritten mandate that nobody ever talks about, but everyone knows they have it, which is keep the markets functioning. and the tool that they use when the unwritten mandate becomes important, as it did in 2008. Or as it was in 2020, or kind of as it was in long-term capital in 1998, they print money, lots of it. And so, we go along, Powell trying to act like Volcker, saying he's getting inflation under control and he's not printing money anymore until something breaks, and then, they have to print gobs of money, right? And that's kind of what's going on.
Before we, and again, I want to get to the big print because I want to know what it was like writing that and the thesis of that. But I love kind of takes on pension funds, and I study those a lot. And looking at, the pensions were brutally beat up by the '08 crash and still sit at a fragile funded state today. Two areas that, pensions have some exposure. Number one, many were late to private equity, so some of them have a large exposure to private equity, and you still have this commercial real estate kind of situation. What do you see as they're going to deal with that?
I think it's absolutely tragic and sad what's going to happen to so many pension funds and all, teachers, firemen like yourself, people who paid into these things for years and years and years, and they're managed by idiots. And so, they have a panoply of shitty assets. They've got commercial real estate, which has suffered greatly as a result of, Zoom and people working from home. The demand is down. You see all these buildings being sold for pennies on the dollar. So they own notes against that, which they're getting hurt on. Yeah. They were late to private equity, and the private equity game is also a big bubble where they were marking things up way too much, and so they're going to get tagged on that. They're almost forced, I think, and you would know this better than I because you're closer to them, but I think they're almost forced to buy government debt and debt in general. And in a highly inflationary environment where the money is being debased, debt does not work well, right? And then finally, they've got a big slug of equity, and probably if they're like other investors, they lean towards the triple Qs and the Mag 7 because those are the high performing areas, and of course they're the most overvalued areas, and so they're going to see the most damage in this downturn. So, I would just caution anybody, It's sad. It's absolutely tragic what's happening in this country. I mean, people work their entire life for a company. Companies promise them a pension, like GE, right? And GE didn't get bought up. The company gets bought out by a PE firm. The PE firm pays a liquidating dividend. The company goes bankrupt, and the pension goes away. Do you know what I mean?
And then those sit on the books. They accrue value. They don't get redistributed, and then they're shuffling them between.
There's all kinds of chicanery that goes on. So. It's really, really sad. And what it proves to me is that everybody's got to become their own financial agent. You don't count on your pension, don't count on your government, don't count on your Social Security, don't count on any of that. Take control of your own finances, save as much as you possibly can, and put it into Bitcoin.
Well, that's a great transition into the big print. What was it like writing the book? What is the thesis of the book pertaining to, right, the debasement of the currency and where Bitcoin fits into that, story?
Yeah, thank you. That's a great question. So the big print was written. I started writing it in May, June of last year. I finished it in December, and a month of processing in January. It released in early February. So the thesis behind the book is I wanted to write a book that any person could read, an average American, no financial background necessary, maybe no interest in this, just somebody who works hard for a living and can't understand why their money is getting less valuable all the time, and they're being hurt by inflation. And I think it's just tragic what's happened to this country. I mean, the bottom half of this country has just been eviscerated, and thankfully Trump and Bessent know that, and Bessent just said it in an interview. And so I wanted to kind of explain to them in very straightforward, simple terms, but with details and facts, why they're suffering and why the system has been broken, has been rigged against them. And the politicians would have them believe that it's greedy corporations or billionaires or whatever, and the billionaires play a role in it. I mean, quintillionaires do, but let's get down to the core problem. The core problem is the money's broken, and we're in a sovereign debt crisis. So what I tried to do in the book was, and I broke it into two sections. Section 1 is the problem, and Section 2 is the solution. So I tried in the first section, 1, give enough information on the problem and describe it and show the charts and the data that anyone, even with no experience in finance, could read it and get it and understand it and would go, oh, wow, I see what you're talking about. And man, maybe, and hopefully maybe even because I'm aggressive about it, get mad, kind of like, damn, these people have been screwing us.
Action.
Yeah, right, which then calls them to action. And honestly, the first part of the book is kind of depressing. It's like, it's been going on for a while, it's getting worse, it's getting really bad right now, and we got to pay attention to it. But the second part of the book is optimistic and hopeful because, even if we didn't do it, we're going to a better system because of technology and decentralization and all the trends that are taking place in our world are going to make for a much better world once we get through this monetary problem we got. And so, what the second half of the book does, it tries to explain to people, here's how you protect yourself, Bitcoin, why it makes sense, why it's very asymmetric, why your finances will be much better if you buy Bitcoin and save in Bitcoin terms. And then the second part of it is, all the good things that Bitcoin will do in terms of helping the economy and helping people, making the world fair and operating in a fair system. Apart from just making money on it, number go up, it'll reduce wars, it'll reduce financial inequality because we're all playing by the same mathematical rules. And so the second half of the book really tries to explain Bitcoin very clearly and simply and make the case that if you agree with part one that you've been screwed and that the system's broken, your best bet in terms of both protecting yourself and then collectively, if we all get behind it, moving the system towards a better system is to buy and support and advocate for a Bitcoin standard, right?
For sure. You know something, there was a tweet that came out last week or a couple days ago. I don't know who it was in the financial world, but they basically said this, one of the most off inaccurate statements is that the currency's being debased. It was intended to be debased, and everyone has always known you don't save in dollars, you have to find assets. My counter to that when I read it was, wow, that's an elite group that speaks to, right? And the bottom half that you talk about, even the pension fund doesn't have access when the deck gets reshuffled and liquidity is moved around. They're not at the closest table on who wins from that, and there's winners and losers.
That's absolutely right. I don't know who said that, but whoever did, that's an evil statement, but it's correct. The currency is going to be debased. So the problem and the reason, the playing field is unfair, and the reason the playing field is unfair is if you're a financial operator, you're Wall Street, you're a hedge fund, you're a PE firm, you're a large investor, you're a wealthy person, you can borrow at very low rates and use that to buy things that provide a high yield, and therefore you get ahead at the expense of everyone else who can't borrow at those low rates. Because if you and I go to borrow money, other than our mortgage, which it can be a reasonable rate of interest, everything else we borrow is at 25% from the credit card companies, and they're usurious. It's a terrible deal. So, but if you're a big, powerful organization or connected to Wall Street or part of the game, you can borrow at very low rates, and so. That basic monetary unfairness is what has created the wealth inequality and all the political anger that people feel. And it's another example of how it's a rigged game. In 2008, these people, they go and they lever themselves up, they pay a ton of bonuses, they croak the financial system, they basically put it right to the edge where, Hank Paulson said, if you don't give us this, the ATMs aren't going to work.
Yeah.
Well, the government has no choice. They print a ton of money, and instead of being penalized for doing all this bad behavior, they pay themselves $20 billion in bonuses that year.
Yeah, they're made whole. And then the pension funds actually, even though they got some help, the way they made up the difference is they said, hey, you're going to retire now 3 years later or 5 years later.
Right.
You're going to pay more into the system. We'll balance the ledger on your backs. But those who gambled and were reckless with the system, we're going to make you 100% whole because we depend on you to make money work.
That's exactly what happened. And it's just tragic. It's like the money people hold a gun to the head of the country and say, give us what we want or we're going to blow your brains out.
Yeah.
Nobody wants to have their brains blown out, so we give it to them. But giving it to them is why gasoline's expensive and food's expensive, and because there's really no free lunch. They just print the money, give it to those people. They don't give it to the regular person. And regular people get really hurt. My sister lost her house in the GFC, and so look at COVID. Look at how everyone's suffering from the inflation caused by COVID. The grocery store is a nightmare, right?
Yeah.
It's just. For everybody.
We hear the numbers of 2%, 3%, but everyone knows that, hey, my credit debt seems to be growing faster, and I'm not spending more recklessly. I'm not buying a bunch of stuff. I'm just living my same life, and it's just falling behind.
That's absolutely right. And there's actually a nice little section in the book that talks about and gives examples of how the government cooks the inflation numbers. Because they're saying it's 3%, hopefully going to 2%. That's not true. That's not true at all. That's not what I'm seeing.
No.
All my stuff is getting expensive every single time I go to the supermarket, right? So,
100%. Well, the folks that tune in for us are workers and wage earners. Where can they find the big print? Because again, I learned so much about money through Bitcoin, and I came from a working class family. I know you studied finance and understand economics, but I think people have to read about this stuff and they have to learn, because it's one thing to sit there and realize like where I'm at and what I have available to me. It's another thing to just be blindly going through life and just being a pawn in the system.
You've got to take agency of your own finances. I mean, turn off the football, turn off the other stuff. Take the time. I mean, the audiobook on this is 12 and a half hours. If you listen to 2x, it's 6 hours. The book is probably 10 or 12 hours of reading, and it takes a little bit of thought. But I mean, you're talking about your financial future here, and in my opinion, we're talking about going into a very troublesome time where a lot of people are going to get badly hurt. So I can't overemphasize how important it is to try and come up to speed on this. And the place you can find it, I mean, this QR code probably it's not going to work from that distance, but yeah, well, maybe there's a way. Yeah.
Scan that.
Yeah, I don't know if will that work. No, it's the QR's on the other side. Yeah, the QR code takes you to Amazon. Just go to Amazon and type in the big print, and it will show up. And it's in all formats. It's hardcover, paperback, Kindle, and audiobook. So, I would really strongly encourage people to try and read it, because I think it'll explain to them very clearly what's happening, and then more importantly, it'll tell them what to do and how to protect themselves. And I just want to see. I want to see. I said in the beginning of the book, right, one of the statements I made is, I'm 67 years old, and I've been in this area all my life, and I've seen how bad it is, and it's gotten worse. And that's why I wrote the book. I wanted to document the history of it. And this country was a nice country in the 70s. I mean, it wasn't perfect, the Vietnam War, et cetera, but it was a nice country in the 80s even. And it's not the same country anymore. People are angry, people are mad, people are getting burned by inflation. The middle class has been eviscerated. The lower middle class, I mean, people below the median point, they've been really, really suffered terribly, terribly. I mean, their wages just have not gone up, and the cost of everything's gone up a lot. I mean, it's kind of like, how much more of this can we take? And that's why Trump won. Thank God he did, and that's why he's doing what he's doing. But even to be totally transparent on that, this is going to be painful. Yeah. I mean, there's no way of avoiding this pain.
That curve shows that both parties in the White House printing it's always happening.
Correct.
The monetary supply is always on the way up.
Correct.
The debt ceiling is always getting raised.
Trump gets a B plus from me. If Trump wanted to get an A from me, he would have to come out with a speech that I put in the book about what a president should say, which is, we are going to abandon Keynesianism and go back to a sound money system. If we did that, it's funny. I mean, as bad as all this stuff is, and again, I hate being accused of being a doomer, but if you look at it analytically, you just have to conclude it's not good. Okay, as bad as all this stuff is, there are many, many instances in history where other countries have done this, and what they do is usually the currency has a lot of inflation, maybe it even fails, but they reset to a sound currency. And I was on a podcast with a guy a day or two ago, nice guy, who was from Argentina. And he was a teenager in 1990 and 91 in Argentina, and they had a hyperinflation. And he told stories of how his mother would get paid for her work, and she would immediately race to the grocery store to buy the food, because she knew one day later the food was going to cost more, right? That was how bad the inflation was. And he said it just got horrible, and then the money became worthless. And he said, but then they reset to a new monetary standard. They actually went to the dollar, which is not a great standard, but it's better than their currency. And he said, it's amazing, Larry, within 6 months or a year, everything was okay again, because we had sound money. Yeah. I mean, broken money breaks everything. It's the base layer of our operating system for our economy, and it just breaks everything, and that's why people are hurting so bad. If we go back to a sound money system, things will be much better, full stop.
Like you said, 60s, 70s, savings culture was thriving. People would save and say, hey, save, put away, plan for the next generation. So
absolutely. I mean, the Keynesians believe in eating the seed corn. I mean, John Maynard Keynes said in the long run we're all dead. That's just evil. I mean, basically we should not eat the seed corn. You want to save the seed corn, because that's what allows you to increase the productivity. And that's how, I mean, one of the other things that I think is really sad that's going on right now, Dom, is there really used to truly be an American dream where every family could feel like the kids would be better off than their parents. You know what I mean? You could see it. I mean, and I'm not so sure that's true today. At least it's not under this system.
Well, hopefully, people will start taking agency over their finances. Larry, I know they're going to kick us out here soon, but you're a valuable voice in this space. You're a valuable resource for workers and wage earners at home. You've studied finance and economics, like you said, for your lifetime. People should read your book. They should learn about how money works. They should learn about Bitcoin, whether they like Bitcoin or not. They can't deny the lessons in Bitcoin. And then if not Bitcoin, then what else?
Right. I mean, clearly Bitcoin, gold's a distant second choice, but at least it's neutral reserve currency. I mean, let me just say, I'm not political. I'm a libertarian. I'm very neutral. I mean, liberals, conservatives, I mean, anyone can get behind sound money.
Yeah.
And some of the things the liberals are complaining about, I get it. I mean, I get, I don't believe that Bernie and AOC have the right solution to the problem, but I understand their anger.
Yeah.
I mean, the country's really broken, and I just beg everybody to try to, I wrote the book because I just feel like very few people really understand the core problem. And the money is the core problem. And once you understand it, as you know, Dom, because you're full on Bitcoin, once you see it, you can't unsee it.
100%.
You're like, oh my God, that's the problem. We got to fix that. Because I think the average American just wants to live their life, take care of their family, take care of their kids, have a better life for their kids, and
handsome value.
Yeah, and handsome value, and be able to retire with security. And sadly, that's all slipped away. It's really slipped away.
Well, we'll get back. Hey, thank you for talking with us.
Good to see you.
I appreciate you, Larry. This is Dom Bay, Proof of Workforce Live, where, again, if you're going to trade your time for money, make sure your money holds up over time. Larry Lepard, go check out the big print. Thank you so much. Live from BitBlockBoom.
Thanks, guys.
Thanks
really
again, Larry.
Appreciate
Appreciate you.
Yeah, thank you.